Hi guys, my name is Goela and I'm an investor, trainer and mentor in stock markets. Now guys, when we select a stock, when we do a stock selection process, first we have to do the technical analysis on it to make sure that we are buying and selling at the right time to enhance our profits. Then we do the fundamental studies on it to make sure that the company we are buying is strong fundamentally. The books are safe, the books are sound. After which we do the behavioral studies in which we make sure that we are not taking an emotional decision. We are not working on hope, we are working on strategy. That is what behavioral studies tells you. Now, are all these three aspects enough? No. Another very important aspect which I tell to all my students is that always look into the top level management. ये बहुत ज़रूरी है. जो top level management है, are they ethical or not? Do they have a vision or not? Right? Everyone asks me the same question, Harsh, then how do you judge a top level management? Well guys, this itself is $1 million question and today we are going to answer it. Now here are my 4 guidelines. Point number 1, dividend payout. Now when I say dividend payout, my only intention is to see if the promoter is concerned and wants to take care of the minor shareholders, right? Obviously, he's obviously concerned about the major stakeholders, the major shareholders, but I'm talking about if the promoter is concerned about the minor shareholders. Now, minor shareholders क्या होते हैं? जैसे जिनके पास 1000 शेयर हैं, they who are holding 2000, 3000, 4000 stocks maximum, right? So when he pays dividend, it shows that he wants to share his prosperity with everyone. So yes, checking the dividend track record is very, very crucial. Point number 2, the 10-year track record. Now, for this, make sure that the company you're choosing should have a 10-year track record wherein for the past 10 years that company has been performing stably and has been giving decent growth returns both in sales and in profit. Point number 3 is that management should be professional. Now in this, what I mean to explain is that if there's a father-son company, who the father is the CEO right now and son will become the future CEO, on top of those companies are always better who have professionals as management, right? Like HDFC Bank, like ICICI Bank, like L&T. Point number 4, ownership and management should be different. Ownership and management should be different, right? So when I mean this, I mean to say that the company's owner should not be the manager. There should be a professional management taking all the decisions. Why? Because it was seen, अभी पूरी इसमें study हुई हुई है that if the owner takes the decision, then he takes a lot of decision with a lot of emotional bias also. बहुत emotion से decision भी ले सकता है. Whereas in a professional management study, the chances of their decision taking are much better, right? Now all these 4 points, I can categorize them as, I would summarize them as integrity. These are integrity of a top level management, which means that they care about the minority shareholders, the small stakeholders, and they are completely transparent. This is what integrity is. Now I'm sure काफी लोग comment में start हो गए होंगे that Harsh, your points are wrong. You know, all the guidelines, and again, they are not facts, they are guidelines. Now whatever I mentioned, they are subjective, they are generic, they do not apply to everyone. Like in the case of dividends, if you see some of the biggest companies right now, Google, Berkshire Hathaway, they don't issue dividends. So are these companies bad? Now when I said don't buy dad-son companies, then I'm sure a lot of you might be thinking of that one stock and you might be thinking, Achha, you mean to say that company is a bad stock? No. All the points, all the guidelines I mentioned are generic. They are guidelines. Now I will give you 5 case studies, right? Now these 5 case studies will prove your point even more. सबसे पहला, Satyam Computers. It got bust in 2009. Then Enron. Now Enron, इस पर Netflix पे पूरी documentary भी है. Please be sure to check it out. It's amazing. Now Enron was the fastest growing energy company in USA. And to be honest, at one point of time, trust was a synonym of Enron because Enron had so much of trust. It busted in 2001. Then Lehman Brothers. Lehman Brothers revenue of which was compared to India's GDP. Lehman Brothers का revenue इतना था कि इंडिया की GDP से कंपेयर होता था. It got busted in 2008. Then Unitech, which was supposed to be the rising star of India, had solvency issues in 2011. Kingfisher Airlines, the company that redefined aviation, that redefined luxury aviation in our country, got busted in 2012. ILFS, one of the biggest infrastructure finance leasing corporations, and I'm sure आपकी city में आसपास कुछ major D&D या फिर as in major bridges या major buildings or major infrastructure issues, chances are it's this company that have issued it. In 2018, it got bust. DHFL in 2019. Now, why am I mentioning all these companies? Because I want you to realize that all these companies, they had good managements. They were awarded with leadership awards. Right? They were technically sound, they were fundamentally sound. These companies were behavioral strategy wise, they were perfect. Their integrity of top level management, although all those four guidelines were already there. Then what was the problem? These companies had huge market capital. Every investor at that point of time had these companies. 110%. हर portfolio में एक companies होती थी. They were one of the fastest growing companies. And these companies were approved by the government, by credit rating authorities, by banks because they were giving loans, by auditors, by CAs, by everyone. So tell me this, अब क्या करें? Can't we even believe balance sheets? Who to trust? And I've just listed a few case studies. I'm sure you might know that there are several more. Then who to trust? Now tell me this. Am I wrong in saying that that the difference between an ethical and unethical top level management is whether they have been caught or not? Am I wrong in saying that the only difference between an ethical and unethical management is whether they have been caught or not? जो नहीं पकड़ा गया वो ईमानदार, जो पकड़ा गया वो बेईमान. जो नहीं पकड़ा गया वो ईमानदार, जो पकड़ा गया वो बेईमान. Am I wrong in saying that? No. Then what to do? So here is my conclusion of the entire thing. First, if you are a trader, तब तो देखो this top level management issue will not concern you much. This will concern you when you are a long-term investor. So I have taken this strategy, and this strategy is very simple and anyone can use it. सबसे पहला, if you have, again it's a hypothetical strategy, if you have 10 lakhs and you invested in 10 companies 1 lakh each for 5 years, right? You have 10 lakhs, you invested in 10 companies 1 lakh each in every company for 5 years. So if you invest for 2 companies, you invested 2 lakhs, the returns will be 6 times. After 5 years, these companies will go 6 times ahead. So that 2 lakhs value will be now 12 lakhs after 5 years. In the second situation, you buy another 2 companies, and those are again you put 2 lakhs into it, and those companies will go only 3 times. They will go up by only 3 times. So that will become 6 lakhs for your return after 5 years. Then after that, you have 2 companies and you invest 2 lakh more into it, and they will give you the return equal to the index. They will perform with the index, that is 17%. So that will become 4.4 lakhs. After which you invest in another 2 companies and you again invest 2 lakhs. That give you a return of 7%. जो banks और FD के आपके आसपास होगा, they will give you the return as per a bank or a FD. That will give you 2.8 lakhs out of 5 years. And then in the next 2 companies, you again invest 2 lakhs, and those companies will get dissolved. They will have solvency issues. They will give you a return of 0. So after all this, you will in totality, after 5 years, you will get a return of 25.2 lakhs, which is a CAGR of 21%. So my conclusion is, there will always be a risk of a top level management. And how can you perfectly analyze it? You can. There are guidelines, but इसको perfectly analyze करना is almost next to impossible. You can't be 100% right on this. तो आप देख रहे हो और ये कितना ज़रूरी है. So make sure when you're buying companies, It should not be only in one company all the time, so that if that management goes bust, you're automatically finished. Nahi. It should be diverse. Simple strategy like I explained to you. Right? So this was my take on top level management. What do you think about it? Do you think my guidelines were extremely wrong? Do you think top level management is not a necessary factor or not a necessary tool to analyze before buying a stock? Let me know in the comment section below. Like this video, share this video, and I'll see you next time. This is Goela School of Finance, financially empowering you.